Hey guys, quick update here on Amazon.com Incorporated, ticker symbol AMZN, listed here on the NASDAQ. This is a company that I've mentioned multiple times over months and years, multiple times in the Discord. Again, people always ask me about these Magnificent Seven and the largest tech stocks, and they ask me personally, in my opinion, what I like the best long term. And I have consistently gone on record and said that, in my opinion, I think that Google and Amazon are either fair or undervalued. In this situation, we could potentially make the argument that Amazon is actually still undervalued, but I just wanted to go over these earnings real quick. So you can see earnings obviously came out. We had the initial spike down, then we spiked up, kind of flattened out here, looking like we could maybe potentially be lining up for an ascending triangle here, maybe bringing it up the next leg higher, because Amazon technically did beat revenue estimates. We can see EPS estimates here of 84 cents, company post 98 cents, coming in about 16% above that profitability expectation. And we can see on the revenue side as well, 142.65 billion. The company comes out and posts about 143 and a third billion, beating by over 650 million, or about 0.5%. They mentioned also that training focus on AI, and of course better than expected cloud strength. So in my opinion right now, it seems like the AWS segment seems to have high focus on it, we'll say. So with the company coming out and saying that they have good cloud strength, I think that adds it's almost like the extra cherry on top of the sundae, in my opinion, not just with the company beating revenue estimates, but of course the cloud segment being higher than expected and seeing continued growth. 17% growth at cloud computing unit. So, in my opinion, across the board, Amazon really remains to be very solid and very stable. They have a very good track record of beating these estimates and showing just continued growth, continued demand. Sales cloud computing platform annually to 25 billion. Overall North American sales climbed 12% to 86 and a third, while international revenue gained 10% to almost 32 billion. Operating income surged 15.31 billion from 4.77 billion a year earlier. Expects second quarter sales of 144 to 149 billion, annual growth between 7 and 11%. And of course, analysts were looking for a touch over 150 billion. Again, we have now reached the point where looking for 7, 8, 10% growth here quarter over quarter is somehow below analyst expectations. But I guess it is what it is. But we all know that obviously these sales numbers and how much consumers actually spend on, a quarter to quarter basis can fluctuate, but pretty conservative outlook here moving forward for second quarter, but technically did beat today. Projected operating income between 10 and 14 billion in the current quarter, compared with 7.7 billion in the same quarter last year. So this is why Amazon really seems to be on the up and up, in my opinion. 61% of unit sales were from third-party sellers. 100 billion annual run rate. Yeah, see, we're seeing good growth here. Sales up 13% year over year. And like I said, now it seems more about the clouds and the servers and the AI. So again, to see the Amazon Web Service segment rise 17% year over year, that is why, in my opinion, even the potential lower conservative forecast moving forward, it's just being outshadowed right now by this good news. And of course, technically, the company did just beat on the EPS and on the revenue side. Quote, it was a good start to the year across the business, and you can see that both in customer experience improvements, financial results. Combination of companies renewing their infrastructure modernization efforts and the appeal of AWS's AI capabilities is reaccelerating AWS's growth rate. Now, $100 billion annual revenue run rate business. Company hit its fastest ever delivery speeds in the first quarter, with more than 2 billion global units arriving the same or next day. Right? They also have Prime Video. Announced during the first quarter that I will stream an exclusive NFL playoff game now in January of 25. And we all know that people view in and pay more close attention to the playoffs leading up to, of course, eventually the Super Bowl, most watched game. Move follows Amazon's success, right? Thursday Night Football, yes, yes. Using AWS, AI services for new customer experience, accelerate employee productivity. Select customers that were highlighted include Siemens and Philips, of course, two nice brand name companies. But this is what we were projecting to when we saw the AI boom in a lot of these tech companies, or really in a company in any sector who was saying that they were going to now begin to implement AI and, try to view some different strategies. We saw this potentially happening. Right? So now you're seeing there's more and more demand for AI. People are using AI more than even previously anticipated. And chances are it's probably going to lead to, I don't necessarily, excuse me, I don't necessarily want to say bigger and better things across the board, right? Because we know it could potentially turn negative real quick. But at the end of the day, what it was going to do, and again, I know I may have just kind of like generalized it and just kind of briefly spoke on it, and we didn't get into great detail. But I mentioned that with the use of AI, what it was going to do is it was going to show all of these companies where they could trim the fat or something like this, accelerate employee productivity, right? So this is what I mean. It's going to highlight the weaknesses and also highlight the strengths of the business, of the employees. And what it's going to translate to is now, in my opinion, what we're seeing with a lot of these earnings is you're now seeing increased profitability well above analysts' original EPS expectations. They're able to position their strategies of their business to now generate more revenue above analyst expectations. So this is why even potentially companies who were kind of struggling or maybe were inconsistent on the earnings report side, they may now pick up much, much more consistency over at least the next year or two, I'd say, in my opinion, because the AI itself is going to be the brain behind the operation of actually generating more revenue and increasing and turning around the profitability for these companies. So, of course, just went off on a little tangent here, but it says here Amazon will invest 5.3 billion in Saudi Arabia, which of course we know is a pretty strong market. 5 billion in Mexico to grow its infrastructure and Amazon Web Service. Company is also investing 10 billion in 2 data centers in Mississippi. So again, technically the company investing money, right? So that's like money out of their pocket, out of the door, but we know that these are investments. And obviously, even the biggest one here, the 10 billion, 2 data centers, chances are if they're investing that money, then they see they need them. And of course, they see future growth and demand from it, right? So, we know we don't have an idiot behind the wheel, so to speak. So all of this, in my opinion, even though it's technically money out the door, like this investment in Saudi Arabia is probably going to pay off, right? We know that there's a big market in Mexico as well, so I understand they're going down south into Mexico, but of course, investing into the data centers, in my opinion, probably only going to translate to bigger and better things, 12, 18 months down the road, or however long it might take to actually set up these centers. Honestly, I'm not sure. But yeah, we can see next quarter guidance slightly light. It's very, quote, it's very early days in all of our businesses, and we remain excited by how much more we can make customers' lives better and easier moving forward. Mm-hmm. Mm-hmm. And that was earlier. Okay. So, yeah. Overall, right now, Amazon currently up about 2.5% here. Closed at 175 right on the dot, down 6 points, 3% hit on the day. But again, we had major indices red across the board, and we can see the stock right now up almost 4.5 points here after hours of about 2.5%. And again, I just think that there are so many positives that are overshadowing that conservative outlook for next quarter potentially coming in light, right? I just feel like everyone really sees the long-term growth. And again, in my opinion, the fact that it's undervalued, right? If we look at the numbers, we could potentially make the argument that the PE is high. However, all of the years, basically, when it's first started growing like a weed, all of the years, Amazon always had a very, very high PE, and analysts would consistently see the future growth coming down the road, and they would consistently increase their price targets, maintain buy ratings, maintain outperform ratings. And I remember pulling up Amazon again like 10 years ago, and you were able to see that the PE was like 700 or something. You know, it had like this outrageous PE, and a lot of analysts would always try to come on like CNBC, and they would look at the numbers and they would say, oh no, it's massively overvalued, it's due for a pullback. But what happened? The company just consistently kept growing like an animal, consistently coming in above expectations. So you have consistent price target increases, rating increases, and like we always say, consistency gets rewarded. However, this company is known to potentially kind of pop and drop here depending on what these earnings are. But looking at the numbers here, 1.82 trillion on a 62 PE, right? In my opinion, the real only big argument could be made is that the PE is a little high. However, we have seen higher. We have a beta almost in line with the market. Again, beta is volatility of the stock in relation to the overall volatility of the market. You can see just slightly more volatile than the market. Look at the EPS, though, has been growing very nicely. They're coming in hefty and healthily above these analyst expectations on the EPS side. Look at that annual growth here. Again, just going back the last 5 years, 280 billion, 386, 469, 514 we'll call it, and then 574 billion. So even looking at the quarters, you can see, look at this growth here over the last couple of quarters as well, with the net margin percentage following as well now over these last several quarters. You can see Q4 this time last year, company net margin percentage slightly positive by about 0.2%. Now we fast forward to Q4 of 23, last quarter that came in, and you can see net margin now jumped up to 6.25%. So the company, again, not only maintaining that demand, that growth, and bringing in that revenue, but at the same time now further increasing profitability. So in my opinion, I do think we are going to see bigger and better things. But even if we look annually, again, for 2023, 575 billion, we'll call it. Look at that market cap, 1.82 trillion. When you look at basically every other large tech name in the space, and we have looked at them before in the past, and initially when I looked at them, again, the way I personally look at it with the market cap to revenue comparison, I like to look at the PE, how much business is the company actually generating in comparison to what the market right now is valuing the company, right? And again, sometimes we're right, sometimes we're wrong, but a lot of times that stocks, that I say stocks, in my opinion, are overvalued, they do potentially begin to have that sell-off. And again, if it's not a massive traded meme stock, maybe something like a Tesla, my timing might be off. But if you recall, we looked at a new up-and-comer in VRT, VertNet, I believe it is. And VRT, again, that one was called perfectly. The stock was up in the high 70s, I believe. I expected a pullback down to like the low 70s, 71, 72. Then it was going to bounce and potentially gain some momentum going into earnings, which in my opinion, I said they were probably going to beat, and that might propel them to a new high. And if you go and look, that is exactly what the stock did. And it pulled back to the 70s, and then it bounced, and then they beat earnings and they hit highs. So again, sometimes depending on how popularly traded one of these big tech names might be, my timing could be off a little bit. And again, nobody is perfect, but either which way, I do strive for perfection, even though it's basically close to impossible. But again, a touch below 600 million in revenue for 2023, 1.82 trillion. So they're trading like 3.5 times annual revenue. And if you compare this with other stocks we looked at, the large techs, everyone is trading at a significantly higher multiple when compared with Amazon. Now, granted, again, with something like a Microsoft, the PE is much lower. It's down here at 35. But look at the market cap here, 2.9 trillion. For 2023, they brought in 200 billion in change. So again, this company still, even after coming down a little bit, is still trading like 14 times annual revenue. Right? What's another one? Netflix? Let's look at Netflix real quick. 237 billion with a 39 PE. Annual revenue, almost 34 billion. And look at the market cap, 237 billion. So they're trading like 7.5, 8 times annual revenue. And even if we pull up Google, we can see the same thing. Google, 2 trillion. And again, look, we can see, again, when I personally look, in my opinion, at the revenue to market cap comparison, earnings history, and of course the PE ratio, we can see, in my opinion, Google is one of the more attractive larger tech names in the space. And we have a market cap of 2 trillion, and we have a PE of about 25 and a half. But if we come down here, again, revenue brought in for 2023, a touch over 300 billion, which would translate to about 6.5 times annual revenue, right? So essentially every larger tech name that you look at, and listen, justifiably so, because we know this is a growing industry and it's all about tech and that's where the money is flowing. And especially now with the AI boom, we're going to see even more demand and revenue flow into tech. So I understand if all of these big names are trading if they're trading at a value that could be viewed as overvalued when compared with other sectors, right? We understand that. But even looking at something like AMD, again, I know it's having a pullback today, but look, we have PE 300, market cap 255, and we look at annual revenue, 22, we'll call it 23 billion even. And again, you can see that's 10 times annual revenue, right? So this is why I'm saying if Amazon either wants to remain flat here, or even if it starts pulling back 3, 4, 5% on that potentially light guidance moving forward for next quarter, in my opinion, I would still be a buyer of Amazon, and I appreciate the fact that they may not be as profitable as some of the other tech players. But again, just looking at the market cap and the actual valuation of the company, I mean, this company, in my opinion, is probably going to be a steady grower over time and could be viewed as undervalued still. RSI was middle of the road, had a drop today, stock down, 3% today. RSI sub 44, right now 175, 177 after hours. So yeah, they're keeping it. Looks like it's hanging out right around, slightly below this 50-day moving average. It could bounce around, but in my opinion, it should really get up to that 190 mark, because again, I understand next quarter may be light, but technically we'll cross that bridge when we get to it. And even though forecast was potentially light, they didn't miss earnings until 3 months from now when they miss earnings, right? So, I mean, I did an earnings video. I told you guys, I spent hours going back, look at previous forecasts. I looked at 14 stocks reporting earnings not too long ago. And one of the ones that stood out to me was Snapchat, who forecasts a very, very negative outlook for the quarter that they just reported. So I looked at that and I said, oh, snap puts. And of course, they happened to beat earnings, random surprise, and everything's fine. And the stock jumped up 30+%. So again, technically, we know, now we do anyway, that these forecasts moving forward really could mean nothing. But in my opinion, it'll probably hang out in the high 70s, low 180s. Getting up here to, that would be new 52-week highs, yes. 189. Yeah, I mean, obviously, if it gets all the way to that top Bollinger Band, it'd be 193. It'd be a new 52-week high. But even if it wanted to bounce up and retest those highs and could potentially form a double top there. But in my opinion, it should probably get back to the 180s. That's just me. RSI was approaching the middle of the road right there at 59 1/3. MACD recently crossed to the downside. Let's check the pivot points real quick. I'll let you go. And we can see we're at a main level here, 177.90, which is essentially where the stock is right now, not moving too much, slightly trying to get above it and then rejecting, coming back down below it, and then trying to rise to retest it. So this is why, again, it might flatten out and just kind of hang out here, but the 50-day has been curling. It's coming up nicely now. It's at 148.5. 200-day just steadily staying stable, slightly increasing now, about 143.5. Getting up here to 200 plus, I mean, in my opinion, it's possible, but also at the same time, technically on paper, they did lower that guidance they did, lower that forecast moving forward for next quarter. So if they don't immediately want to chunk it up to new highs, in my opinion, understandable. But overall, yeah, Amazon, like I said, when it comes to the big tech, in my opinion, I think Amazon has much more room for growth. And of course, Google, overall, in general, I liked, and recently they announced a great quarter and announced buyback and dividend being paid out. So right now, in my opinion, in the big tech space, I personally like Amazon and I like Google. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky. They're volatile. They're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.